Hello traders, Damon here. I'm gonna make this short video and try to get through this without much coughing. Now I'm feeling a lot better, but I still have this cough. Anyway, there's a chart posted on the weekend about a new structure high and a new structure low and how to process that. What do we expect when something like that happens? Before I answer that, I want to talk a little bit about this order flow leading into this area, as there is information there that we can use to help us process this in a more effective way. Okay, so right off the bat, we know that we have very good volume, very good momentum pushing price up here, and then we see that we have a little bit of consolidation here. Price comes forward, and then we make another pretty decent projection into a new structural high with decent momentum too, and then we have a very deep correction here. Now, I want to bring your attention to this particular area here because we have very good, healthy buying volume. We don't expect price to come back on a deep correction. Okay, and overall, it does achieve a 45% correction, so which is not that deep in general. But there's a lot of information here that tells us that the sellers are what? Very aggressively selling this area. They're trying to accumulate orders. They're trying to consume and accumulate orders. Okay, so when something like this happens, this is a heads up. This is a wait a minute. This shouldn't be. This is more than just some profit taking up at this particular level. I don't know what's to the left. It's not really relevant, but I do want to call your attention to the area and to what's happening here because the sellers are very aggressive, throwing in a lot of money, a lot of volume into this area, and as a result, we do have price climbs up, and we do have some pretty good volume here and a couple of candles here, and we produce a good new structure high. And then the sellers again play this little game that they played up here, but this time they're a lot more effective and they're able to do a lot of damage here and consuming a good portion of this, okay, with some very strong volume, okay. And then we start seeing our first uh, clues of the buyers trying to come into an area and just being completely overwhelmed and not having enough juice to get in there, okay. So we have a very deep correction. We have again further deterioration of the order flow, further breakdown of the buyers. The sellers are being very aggressive, and then we see a couple of good volume candles here. But overall, all of those attempts gets what consumed immediately. So the buyers are in real serious trouble here. And although we're able to achieve that new structure high, happens to be a lot weaker than the previous one, and the damage continues. Okay, when we have strength and when we have price driving, we see good strong candles, good decisions after one after the other, good volume, good momentum. We sort of see that here, and then just breaks down. As you can see, there's some real breakdown here, producing some complex corrections in the shorter term order flow. And although we achieve a new structure high, we would expect this correction to be deep also. That does not happen, probably because this structure here is very clear and there may be heavier structure to the left, which is fine. But what happens here is very important because, as you can see, as I mentioned, when there's strength driving, when there are people really buying, there's very little selling in between. And as you can see here, that every volume candle that the bull, every move that the buyers try to put up, the sellers come right in and consume those small little spaces, making it even more difficult for the buyers to do what? Achieve longer term price action to the upside. So this move to the upside definitely has its days numbered. And a really strong indication that that is coming to a very near end is when price has a pullback to immediate structure, as you would expect. Good volume, but just unable to convert and make that new structure high. The market rolls over with good volume again, okay, consuming a lot of the space. So the buyers or sellers are just having more and more ease of movement, ease of consuming and accumulating over the sellers to produce a higher low here. And the market does what? Every time the buyers come in, the sellers come in and try to consume them. Okay, they were a little more effective here. And this, whether it was fundamentally driven or not, this is a very significant candle here because one candle did what? One candle obliterated all of this that was already what? Heavily weighted on the bear side, right? So this was just like a nail in the coffin for the buyers, okay? But it is their market. Well, it looks like here long term, they are going to try to hold on to it. Why? Because they're putting in a lot of resources too. They need to protect their money, okay? But at the end of the day, whoever accumulates over the other is going to win the battle. And whenever you have a new structure low and a new structure high all in one swing, what you could expect is ranging price action. Okay, until one side prevails, until one side accumulates over the other, and this creates a lot of indecision. This creates a lot of people on the sidelines as they are now uncommitted as to which way they should trade. Okay, but when you listen to what price is telling you, and when you see who's been accumulating over who, consuming over who, putting up more money, okay, even though price is going up, we already know that the price action to the upside is numbered, and the sellers are able to, no, even if the buyers are able to do this and produce that very weak new structure high, the sellers are able to almost um, consume that distance completely, and again fall back to short-term ABC to the upside here. This is a good area to get short. This is a good area to get short, as we can see that consumption and accumulating of selling over buying that's just completely overwhelming. It's only a matter of time before this does what? Break to the downside. Where would I get short? Where are those heavier sellers coming in? They're coming in somewhere between 115.20 and 115.30. Anywhere in that zone that price touches and you get rotation, it's a relatively safe, good risk reward trade to take to the downside. Okay, now you could say expectations to the new is for a new structure high, and although that is true, this is one of those cases where there's so much breakdown, so much accumulation by the sellers here to stop the buyers that um, even though that is the expectation, that's one of those expectations that will most likely fall within that 30% of the expectations that are likely to fail, and you're better off either staying on the sidelines here and not trying to catch that long because of the breakdown, or being aggressive and try to position yourself for a good risk reward opportunity to a new expectation. Okay, and as price comes in over the weekend, we have that imbalance finally taking hold. Price gaps below structure here is only able to come back to test it, and then the inevitable happens, further price action to the downside, as we already saw the writing on the wall. I hope that helps you guys process this area. I wanted to talk about another chart here, this one, okay, as there was some comments made here about one, projection being good, momentum being good, depth being bad, complex correction bad, and the bottom line is that we're looking for a long here, okay, stop loss here, and to take profit target here. It's not a bad trade, okay, but you have to know that the trade is a lower probability. I think he understood that. I think he made reference to that. But I wanted also to help you guys process this, to help you understand as to which way would be the best way to look at this from a longer, from a more viable trading opportunity. We see what? Weak corrections. We see great projections to the downside. This is our first area where the buyers get a little more aggressive, okay, and the order flow breaks down here a little bit. We get a deeper correction. Then the bears get their act together and are able to achieve good projections. But we can see even from this point here, the buyers are buying into this area, pushing back the sellers. So that leads you to believe that there are enough buyers here that could do what? Correct deeper, have a deeper correction of price. And as the market produces that, it comes back to immediate structure. Sellers come in, okay, and they're made immediately with some buying. I apologize for my dog. And then we get a short-term new structure high here, complex correction. This is the main swing here, and then we see what? We see good strong value come back into the market, consume some of this area. What does that mean? That the buyers have even more work cut out for them to order to take price higher. That there are enough sellers here that the buyers are going to defend this area, but it's going to take a lot more for the buyers to take price higher, because what, this, almost all of this got consumed and there was already a lot of selling even though that there was buying. This took energy to undo this, okay, it took a lot of money. This tires out, this causes exhaustion, okay, this causes price to what, now move up very efficiently. So as the sellers are able to come in nice and strong and consume some of that, it's going to be even harder for the buyers to come in. Okay, so we produce what, a nice ABCD pattern here, and it might have, the completion point may be a little higher, does not matter. We already see that at this level here, we already know at this level here there are going to be sellers there, okay, and good sellers, good selling volume. And as the sellers came in here, the buyers were able to come in and stop that as structure. So what? It would have been extremely critical, important, okay, for the buyers, if there were buyers here, to do what? To achieve a new structure high and blow out of this area. They were unable to do that. The sellers came in with even more volume to come in deeper into this area, retest the zone. Okay, again, consuming all of this volume to the upside. Okay, it's only a matter of time before the market continues to push lower. Okay, and as we can see, the sellers, although the buyers do come in with good volume here. What do we have here? Very strong selling, very strong selling, very strong consumption. Okay, the buyers come in again. Again, they get consumed. Again, everything that they throw immediately gets taken back. Okay, this is very tasking, very frustrating for the buyers. And the area to sell is here, as we can see that the buying volume just weakens, momentum weakens, depth increases, because we're not looking now at a market that's looking to produce or continue to produce new structure highs. It is unable to do that, and we can see that in the bar by bar analysis of this whole zone. Okay, and as we can see that there was an attempt to buy here, all this does is just cause a weak possibility of a new structure low. Okay, but the sellers have been very effective in taking price lower. So although price later went on to create a spike, which was probably news driven or not, it doesn't matter. The important thing is here that I would not have felt comfortable looking for a long entry in this particular area, as the writing on the wall heavily favored price moving down versus up. It is an area of support. It is going to try to hold, but I want you guys to be aware of that. And I hope this little lesson also had value to you. I want to also very briefly talk about my trades today and conclude the video. Okay, so why did I take this long trade, considering the fact that the market, my outlook for the day was bearish? Imbalance should have favored the sellers, but why did I take this opportunity? Well, I took this opportunity, one, because it's an ABCD. There was good structure here. Even further to the left, it's a round number, which also a psychological barrier. But as we can see, the momentum in this particular swing here, compared to what the market produced here, okay, was very weak. There was significant breakdown in the momentum of the second leg, which is something that I really like to see when I'm looking to trade at a D. I also see that although our volume was pretty good to the downside, it was met with a lot of what? Consumption by the buyers. Okay, so although we produced a new structure level, which was the expectation, we came down into a one-to-one. We had a good rotation in price here, which is why I took that. Now I went in favor for a few. I think I was up like 7 or 8 points, and then it immediately rolled over. Now I knew this trade had issues in the fact that the momentum was, the order flow was to the downside. Imbalance would favor the bears. Okay, but I felt good about the weakening of the second leg of this. It's a trade that I routinely take. Okay, but I knew that there was added risk here, so I didn't give it a lot of room. Okay, and I also traded, as opposed to the 6 contracts that I was looking to trade today, I stayed with I dropped down to 4 contracts because of the added risk. Okay, so this trade very quickly took me out and moved down to new lows. Okay, and the market continued to do its thing here. Okay, now order flow was breaking down to the downside. There was heavier volume coming in here. Okay, I was looking to get short here for a one-to-one to the downside, and the market came really close to achieving that. Um, Once the market came up here into my area of interest and had that great rotation, I immediately got short. I really didn't have to think about it all that much. I wasn't very happy about this volume. I knew that my stop needed to be above this area. The market then danced around a little bit, went against me a little bit, but I still saw good selling pressure these candles, and an amazing rotation back to the downside. So I felt good about this, that my timing was good, and that we're gonna get that imbalance, as the buyers were not very effective in accumulating anything, much less consuming anything. But there was breakdown in price here, so I knew that I needed to be aggressive once price got past this area here. And I did lock in 25 points, being aggressive into this area. So we had almost completed the one-to-one, and I did see some pretty good buying interest here. So I got aggressive and locked in because I didn't want to give all that back. And the market came back up. This is the area that I told you that although this rotation looked amazing, we already saw a breakdown. We already see volume entering the market. We saw it here. Okay, we saw it here. So this is a market that's breaking down, that's looking to possibly trade higher. So being that that is the case, you have to ask yourself, okay, if the buyers are around here and if they're serious, what areas will they likely to defend? So you can see that we have structure here. Draw a line across that. We already know that the buyers did what? Once defended there. Okay, so they're likely going to defend this area again. So on this rotation, as tempting and as nice as it looks, you have to understand the general breakdown here, the context of time and space, to understand that what? This area is going to have some buyers, or is likely to have some buyers. Okay, and you're better off giving yourself some extra room. Okay, so now the buyers came up here, and this is where I had to leave today. I don't like to trade past 12, not for any particular reason. It's just I like to have lunch, and then I have to go pick up my daughter and stuff. So, and I take care of my errands in the afternoon. But as you can see, price produced a very nice short-term ABCD. This would have been a very good risk-reward trade to the downside that you would have had to have managed aggressively. You know, this is a particular trade that, because of the breakdown, because of the 100% test, if I would have been short here, I would have been quick to get to a break even at the 38, maybe take profit at the 618, depending on what I see. Okay, but then you also had a very nice ABC to the downside, producing a very nice move that eventually went up to new highs. Um, so that's all I have. I wanted to keep it short. Luckily, I was able to get through it without any coughing as I'm chewing on a bunch of hulls. And I hope these little videos had um, value to you. Now, I don't trade to make up a loss. It's next for me. It's the next trade, the next opportunity. Does the risk reward, is the risk reward there? Do I have an opportunity to get to a break even? Okay. But when there is breakdown, there is nothing wrong with being more aggressive and locking in profit. And if price takes you out, price takes you out. Um, there's there's nothing wrong with, you know, taking what you can get and not giving money back when you know that the order flow is weakening in your favor. Okay, so as you can see, I got in at a very good price. I got out at a really good price too. Basically, I just trailed below the last decision candle here, which was this one, and then there were a lot of inside candles here that you were unable to make another decision, leading me to further adjust this to the downside, and as a result, I got taken out. So I was very pleased with the trade. I was able to erase this very quick 20-point loss. I made 25 points, so I made 5 points on the day. So I was able to come back and save the day, not have a losing day. But that wasn't the goal of the trade. Okay, I was also looking to get back into this market, but luckily, unluckily for me, price got away from me and didn't allow me the opportunity to jump short here, as the risk reward would have been phenomenal. Okay, so I hope again this had value to you. I wanted to keep it short, and that's all I have for today. Thank you.